Greetings, members one and all of the Salivation Nation. It's been quite a ride. Gold and silver have surged over the last day, and who knows, is there any end in sight? Probably, but let's take a look at some of the reasons. There's a myriad of them as to why we saw gold jump nearly 4% and silver jump up as well. So let's explore. This comes to us from Market Watch about gold jumping 4% to settle near a 5-year high. Talked about that record in the last video in reaction to the Fed decision, but I think there's a little bit more to some of the reasons why gold and silver went up today than just that, but I do believe that certainly does play a part. Gold prices shot to their highest settlement since 2013 on Thursday, as investors flocked to the metal after the U.S. Federal Reserve left key interest rates unchanged but shifted away from its patient stance on monetary policy. And that's the story that we had yesterday after the prices went up. So it's continuing today, which further exemplifies, I guess, this whole baked-in concept. I was actually kind of surprised that it rose, considering that, but I think there's more to it than that. Central banks everywhere are preparing to cut rates and restart quantitative easing. And that might be some of the fear that could be heading our way as to why the prices might be going. Opening up a new front in the global trade war, says Adrian Ash, Director of Research at Bullion Vault. In this race to debase, gold stands out as the only currency which policymakers cannot inflate or devalue. On Thursday, August gold rose 3.16%, soared to $48.10, or 3.6%, to settle at $13.96.90 an ounce. It's since come down. Based on the most active contracts, gold marked its highest finish since September 2013 and biggest one-day dollar and percentage gain since June 2016, according to Dow Jones market data. July silver rose 3.02%, 53.4 cents, or 3.6%, to $15.49 an ounce for the highest finish since late March. Notice those percentages, but we'll take a look at the real time of those. We see that gold moved percentage-wise more than silver did, but silver still moved. Gold began climbing higher in electronic trading Wednesday after the Federal Reserve monetary policy statement that followed the gold futures settlement, while the Fed held benchmark interest rates steady between 2.25% and 2.5%. Officials said that over the last 6 weeks, uncertainties have increased about the outlook, hinting at the trade tensions between the U.S. and China, and I think that's part of what's really driving this. Fed officials appeared divided about whether the central bank will cut interest rates this year, judging from the central bank's projections of future interest rate moves known as the dot plot. But the message to the market was clear: monetary policy easing is likely. Precious metals like gold tend to attract buyers in a low interest rate climate. The yield for the 10-year Treasury note dropped just under 2% at 1.997%, a level not seen since 2016. Such a move can make government debt less attractive to buyers seeking haven assets compared to against bullion, and globally more than $12 trillion in government debt now attracts negative yields. So there's another tick, there's another aspect to consider. As long as real rates are headed lower, the pool of negative yielding bonds increases. Then gold is only going one way, said Chris Weston, head of research at Pepperstone, in a note to clients. Gold has gained over 2% week to date as investors have bought the metal owing to uncertainty over the import tariff dispute between China and the U.S. and fears that the global economy is weakening. On Tuesday, European Central Bank President Mario Draghi suggested that the ECB could introduce more stimulus if the Eurozone economy weakens further. The Bank of England's Monetary Policy Committee also signaled a readiness to increase stimulus on Thursday. On Thursday, the Bank of Japan left monetary policy unchanged. Thursday, and maintained a pledge to keep ultra-low rates in place until at least the spring of next year, 2020. With real interest rates coming down in the US and globally, the opportunity cost for holding gold diminishes. Gold is likely to be preferred safe haven as this economic cycle continues to mature, said Matthew Miller, analyst at CFRA Research. Meanwhile, news that Iran shot down U.S. military drone rekindles the potential for heavy-handed U.S. response against Iran. Analyst at Salivate Metal said in the Daily Note that further raised demand for haven gold as well as fueled a rally for oil. And that's, I think, the key here. I think that move today, I think, is probably one of the biggest drivers. Uncertainty in geopolitics, rising tensions in the Middle East there. But Trump came out today and said that most likely he believes, obviously, it was a serious mistake. But maybe that it wasn't purposeful, and maybe Iran is spinning it as being on purpose, while the possibility could remain that it was a trigger finger that went awry there by some general or some such. But I think to launch such a sophisticated missile at such a height, I would think couldn't. I mean, unless it was a rogue general, it could not have really been done accidentally. But regardless, I believe the response will be weighed. There will be some sort of response of some sort, whether or not it be an actual strike against Iran. We'll have to wait and see, or it could be a further strong tension or a tariff, not a tariff, but sanction against Iran, and or who knows, it could be more ships into the region to make sure to guard and our assets and or increase of troops over there. Either way, tensions are definitely high between Iran and the United States right now, and they have been ever since Trump tore up the deal, which was a horrible deal with Iran after the Obama administration sent them pallets of millions of dollars in foreign currency over there. So now these sanctions have been working and proving effective, and who knows, it could lead to another revolution, which happened back in 2009, which was a real chance for the Iranian people to finally get the government they want and desire and deserve, rather than the theocracy that they have there now. But notwithstanding how that's going to affect precious metals, it's going to be interesting to see how the next couple of weeks play out. A lot of people say, well, the summer months are the time where you're going to see the precious metals move downward. And typically that is the case, but with the way things are going now, with trade tensions still, being kindled, and there's a lot of unknowns and uncertainties out there, and the global economy, it does seem less likely that we're going to see the precious metal prices move back down. And silver, by the way, is making a movement here. Let's take a look at the 100-year, not inflation adjusted price of silver over the last 100 years, or since May 2015. The real price was at 51 cents back then, or the unadjusted dollars here. And then here it's, of course, now it's showing it's unless we zoom in here, let's see what it has for today for silver here. If it reflects today, that's June. This is not adjusted for the most recent increase, so that would be $15 and some odd cents. In fact, here we can see it's at $15.49, so about $15.50 there. So if we go back out, $15.50. Now let's look at the inflation-adjusted price. So if you go back 100 years, inflation-adjusted is at $13.06. And throughout time, it had gone down really low. But you almost can't count throughout history and see where things are, what happened. But the lowest it got was $5.90. But if you look at the average out through, you can see that it's well under that $15 up until 1965 or so, and then when we went off the silver being used in our currency, it started to climb up there. It wasn't until 1971, it went down to $8.39. We can see the climb through history here, and especially since 1965, it is well above, and I believe it is now back to a level now where it's really moving along with inflation. Inflation adjusted, especially if you go back here. I guess if you look at certain periods of times through the early teens here, it had risen above that level, but below $20. And so I think if you average this out, I think we're doing pretty good with silver. I think it's holding its own when you adjust the price for inflation. And that's all you can ever ask for with silver. There's times it goes below, there's times it goes above. Gold, let's take a look at gold and the real price. Now, as you can see here, gold has been literally manipulated by the government. There it was $20, and then look at that, just above $20. And has been in, this is a time when the St. Gaudens coin was in circulation here. And then we saw it, and then the time where the executive order was issued by FDR, and then they said, okay, it went from, $20, we're going to go ahead and give you $35 for it. You're going to make $15 on your gold if you turn it in. So giving you incentive, and then they fixed that price to it for the longest time, and then boom, it just takes off, and look where it is today. Now, if you adjust it for inflation, look at that, well above, I believe, if you were to invest it back in that time, adjusted for inflation, is obviously much lower here, in the 60s and 70s here, $252 an ounce. And then we saw here in the 2000s, it was way down there, $391 inflation adjusted. So I'd say gold is doing very, very well. And I think it is this ultra safe haven in times of economic uncertainty. So you're seeing it right here, folks. This is what happens when things heat up in the world, either through geopolitics, trade, relations between nations, and how that all plays out, and or other factors that come into play, including monetary policy, economics. Any kind of time there's fear out there, the precious metals react. And we can see here the gold especially is up 1388 right now as of the recording of this video. Silver's at $15.49, settling up. It's not moving as much as gold. Typically, in this particular case, you would likely see it the other way around, where silver would move up higher percentage-wise because it's a more volatile metal. But I believe because of the commodity aspects and a lot of the domestic good economic news of the day, the stock markets are rising. I think that's why you're seeing silver not move quite as rapidly. And look at that. Because of some of the good economic news, the commodities of platinum and palladium and rhodium are down. So it's only gold and silver that have made moves upwards because those are the safe havens, especially gold. So there you have it. That's the state of where the metals lie today. And again, I think in times like this, no, I don't like it when the prices go up because I'm buying. I'm in a buying mode. I like to be able to buy more. Of course, right now I'm kind of tapped out. I've already made some purchases. And I actually made some purchases when the gold was down. So, and it's something, and got one to lay away here. But these are the times when we can feel empowered that we're making the right decision holding gold and silver. So when the prices go up, be happy about it. But at the same time, we don't want, notwithstanding, we don't want tensions around the world. We don't want war, all these types of things. We don't want economic distress. We don't want a recession. None of us want any of that stuff. And so, but at the same time, we're being smart, and by holding these precious metals, buying them when we can afford to do so, not going into debt to be able to purchase these metals. And so everything in moderation, as a diversification tool in your portfolios. We hold gold and silver. We hold these metals to be self-evident. That evidency is on display right now, holding gold and silver. So post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, and subscribe and hit that notification bell. I think they're starting to work better. Maybe not, but might as well hit it anyway.